Good morning, everybody. Good to see people starting to come in to our session this morning. Really looking forward to this. I think I see Garda coming in again as a panelist, but that's okay. If you can sign out and then come back in on the registration portion, Garda, I'll be appreciated. But yeah, once again, good morning. Welcome to today's webinar. It's Unlock Treasury-led Finance Transformation. So I'm really excited to have Nik Romano with me, who's the Managing Director of Kyriba Emerging Markets. We've been having a good chat in the background there as we kind of wait for our audience to come through. So if you see the title that's on the screen, Unlock Treasury-led Finance Transformation, and if that's the one that you're expecting to find, then you're definitely in the right place. If it was, if you're looking for something different, perhaps you can stick around. You might kind of learn a thing or two today. And just a couple of kind of housekeeping rules, right? As you come in, let us know your name, where you are kind of dialing in from, perhaps even share your organization. I know that, it's often a bit finicky with Zoom at the current moment. So when you post a message in the chat, please select all panelists and attendees. So it's a bit of an annoying thing, but you have to select all panelists and attendees. That will allow everybody to sort of interact with the message. So I can see the numbers are looking good. I'm going to stop sharing for now as people come into the room. We're currently sitting with a good group of people. And as I said, let us know your name, where you are calling from. I see Keith has already said good morning. Morning, Keith. Please let us know your name, where you're calling us, where you're dialing in from, as we get ourselves all ready and prepped up for today's webinar. I'm really excited and really looking forward to this session today. Finance-led transformation for Treasury. So really excited to have this conversation. As we go through today's session, at any point, if you have a question, something that may come out of this session, or something that our presenter will lead to, or even me, please post it in the chat. And as I said earlier, select all panelists and attendees. If you do so, you can ask your questions at any point. I will try my best to pull them out from there and pose them to Nik as we go through this webinar. So don't be shy, use that button. And we actually have a session that we reserve some time for a Q&A session, but often questions come up as we speak, or as the panelist presents the 6 key areas that we're going to talk about today. If there's a question that comes up, all panelists and attendees, and we will try and engage with it either in the panel discussion portion or in our Q&A wrap up. So what do you expect today? Well, like I said, it's a quick intro from me. Welcome, my name is Brian. I'm the Community Manager at CFO South Africa. And welcome to this webinar brought to you by Kyriba, Unpacking Treasury-led Finance Transformation. And you will hear from Nik Romano, who is the MD of Kyriba in Emerging Markets. He'll reveal the 6 key areas where CFOs aren't giving boards everything that they need, and make a case for transformation of finance through treasury and digitization. So really interesting topic. So again, feel free to use the chat function and tell us your business, your name, where you're calling in from. We will have, as I said earlier, a Q&A piece to this, and you feel free to post your questions in the chat as we all go. So Kyriba is a global leader in the cloud treasury and finance solutions, delivering mission-critical capabilities for cash and risk management payments and working capital solutions. So I see that we, what they call an ideal quorum for us to kind of kick us off with 5 minutes after. We've done a bit of the pleasantries, but continue as you get comfortable. to tell us your name, where you're calling us from, your companies, and say hello in the chat, and post any questions to all panelists and attendees. So without further ado, I know Nik wants to kick off with a presentation. So Nik, you can start setting yourself up. And as we say, good morning, Nik, and how are things your end? We're looking forward to today's session.
Wonderful. Well, thank you very much. And I think we've got a screen sharing now. Is that correct?
That is correct.
Wonderful. Thanks. I was surprised after 20 years working for technology companies how technology can sometimes be the challenge for me. But yes, thanks, Brian. I think the idea today was to share exactly what you'd mentioned. What our experience, my experience around the globe, our experience as a firm has led us to understand that are the challenges that many CFOs face today, and how those directly relate to what Treasury can be providing to the CFO, ultimately to the board, in order to deliver what many organizations are aiming to accomplish in this day and age. So let's see. So the agenda for these slides, as we said, we're certainly open to questions you may pose through the chat, and Brian will moderate that, bring those forward, maybe some of his own queries. But I wanted to share the CFO's perspective on something we've all heard an awful lot about these days, transformation, digital transformation, and particularly how Treasury can help to drive that for finance. The case for Treasury leading that finance transformation, and of course the opportunity to answer the questions that you may have. So, as promised, the CFO perspective from on transformation is that CFOs are asked to deliver today a much greater strategic direction for the board. They're no longer typically bean counters, people that are leading an accounting team and nothing else, but really asked to drive the direction of the organization, particularly related to growth, finding ways to have greater insights to enable that. And as a result, that the Treasury teams are quite often the ones who are asked to provide that insight. We in Treasury are looking at ideally, the real scenario. What cash or liquidity do we have available? What are our obligations and needs? What is that real view into the current liquidity of the organization, not the accounting of what may have happened in the past. And so that role of providing the business intelligence that's needed around liquidity, around risk for the CFO is a challenge in the environment that many of us have lived in over the last many years, really forever in many cases. So as we look at a recent report from the Hackett Group, we see that CFOs, and really this has not changed that much until about three or 4 years ago, and since then the trend continues that fraud, monitoring, mitigation of those potential risks is a top priority. Monitoring the risk from a performance from a financial foreign exchange risk, interest rate risk challenges, and providing also on par with that, providing the operational risk management that's needed to drive an organization. These are the top trends of what we see CFOs telling us that they're being asked for. Managing risk is a multifaceted aspect of the CFO role, and a lot of that can be driven by intelligence, planning and foresight that the Treasury operation can provide to the organization. So, we hear an awful lot about this term these days, especially I'd say maybe the last 24 months really accelerated even more amidst the onset of the pandemic last year. But the idea of creating more and more straight-through processing, right? ERP systems began to take us down this path of digitization, but breaking out processes quite often in silos where things were somewhat automated, but there were manual processes that connected those to another silo. So taking fragmented manual processes that do increase risks and obviously costs, and trying to simplify those, bring them together. A lot of what enables that, if you think about it, quite often ERP systems have been put in place, wonderful workflows around payments, AP, takes a look at things, produces invoices, approves items for payments to suppliers, etc. But then often that process ends there, and someone needs to take a file and manually transmit it to the bank, which not only leaves a gap potentially for security, but also it disconnects that great information about the outflow of funds from the organization from the treasury operation. So then they become a little bit more like accounting, where they're just seeing maybe say prior day statements instead of the wonderful rich data that could be provided for them if payment workflow or payment flows were coming through that organization, providing a more real-time view of cash and liquidity. And CFOs require this greater visibility, more real-time, and the productivity that arises from digitizing these manual tasks. And this provides, as mentioned, great insights that can be forward-looking instead of looking at the rear view, and help to support an agenda of growth where knowing where the funds actually sit and where they're sitting idle obviously can help help firms to better invest in their business, paying down debt, whatever may be the most appropriate action for that organization, perhaps at that time. So, why do we see that CFOs around the world are investing in the concept of digitizing, and particularly why are they seeing that the Treasury can lead this? So there's a concept of playing a more prominent role in the business by driving those strategic decisions, and being able to support and have the foresight to identify where profitability and growth can arise from the business itself. Increasing productivity by replacing paper and manual steps. I mean, this is maybe the most obvious statement on this page. Every time that we reduce someone from walking from one office to another to get an approval, and those processes we saw were particularly tried in the amidst the pandemic, of course. These processes too, sending emails, walking things around, of course, leaves us open to the risk of fraud, which we saw as one of the top priorities of CFOs in this day and age. Creating a way of standardizing processes across divisions, subsidiaries, particularly for global operators, where maybe a treasury team sits at the headquarters, but in a far-flung part of the globe, there are some people that provide some treasury type actions amidst others across their day. And so creating that standardized process and environment to manage that obviously eliminates those exceptions that can lead to the potential of fraud or just human error. Obviously, this creates a record, audit trail, understanding of exactly what happened when. Documentation is stored in a central place that can be referenced through approval processes, and for historic means. The digitization of processes also allows for the verification of identity, digital signatures from payments, as well as understanding who's logging in, who's making changes. When, as I said, that audit trail, that aspect of digital solutions and treasury is very key. And this is in turn enables compliance audit teams to be able to better support the organization in their capacity. It's much easier to log into a system, we find, for external auditors, internal audit teams, and look at some of those maybe examples of payments over the last X period, instead of asking the treasury team to go to a drawer and pull out files to prove how something was, how some random payment across the last quarter or what have you was processed and validated. And of course, the ability to provide alerts. So workflows for non-compliance, workflows for identifying potential fraud, et cetera. There we go. So, you know, I mean, in summary for this section, the transactional activities that Treasury will have to go through in this day and age, much of that can be automated and simplified, allowing that Treasury team to work on and focus on much more strategic tasks of analyzing the data, as opposed to gathering, synchronizing, and providing the data to management, sometimes in a delayed fashion because of the effort that it takes to gather it, synchronize it, and validate it. This allows them for more real-time decision-making, ease of production of reporting and analysis, you know, looking at reports or looking at data from different angles, combining them into reports. And this is, you know, a very, you know, key aspect of enabling the overall finance operation. So I think there's 6 compelling reasons to justify liquidity performance management, as we call it, as the leader for this kind of finance digital transformation. And I think those break into the areas shown on this chart here. You know, payments and cash management almost go hand in hand, as I mentioned before. The ability to manage bank relationships in a more centralized way, signatories, you know, reporting that needs to be done on that kind of information, and validation, which is often done in a very manual manner with you know, spreadsheets, emails, letters to banks, and we're seeing more and more, you know, with Swift's KYC tools. You know, we're seeing more and more ways to simplify these processes, and the long-awaited promise of EBAM, I think, is actually quickly on the horizon with new technologies like APIs and so forth. I mean, this will obviously begin with the largest banks and sort of filter down, trickle down to more regional, less technology-enabled banks, but the potential is really there on the horizon at this point. You know, as we discussed, providing compliance controls around these items, the ability for creative methods, you know, working capital management solutions that can power reverse factoring, or even within organizations that have the funding to do so, even only at maybe certain times during their cycles, but dynamic discounting programs. And all of this is designed to really enable Treasury and finance to truly be a business partner to the rest of the business. And I think all too often, especially as I go, you know, back across my 10-year career, specifically in the Treasury space, I see that, you know, there were so many examples of Treasury operations being very tactical and transactional because they had so much to do with so few resources, and allowing them to simplify some of those processes really allows them the space to think, to analyze data, and to proactively partner with the rest of the business for real growth. So I think, you know, Treasury, I just mentioned this, but maybe a slide in advance, but has been an underinvested function in most organizations, large and small, across time. And I think this has begun to change in recent years, but I think we've seen this really accelerate amidst the pandemic. You know, there's a lot of understanding of how important it is to truly understand, you know, cash flows and be able to forecast that information, to be able to manage when you take on additional leverage, as many of us have in the most recent year, to be able to manage the complexities of those covenants that the banks impose, et cetera. And that has created a scenario where, you know, we're seeing this snail begin to pick up its pace. And there's such a high potential for, you know, impact in doing this. These numbers come from Kyriba's own studies of clients over the last 7 years. But on average, we see that the companies have an enormous savings in staff productivity. So the same 3 or 5 resources that you have in Treasury can become so much more productive and capable of what they're able to accomplish. Those that leverage this data and connect to their banks can better understand where their bank accounts are, and are they actually needed to be. We see that there's an average of number of banks per 1 billion, in this case of USD. So let's call it 14 billion Rand in annual turnover. Those organizations see a decrease in the number of accounts that they need to manage, because they have a better understanding of what they have, how they're being utilized, and if there's a better structure for a banking structure for them. Of course, cash visibility. Typically, those that come to Kyriba are not able to see all of their global cash, and so we're able to improve that in a major way. Extreme examples of improvement around forecast accuracy, the time to produce it, and the actual accuracy of that forecast. A lot of the tools that we provide not only allow you to forecast and generate some more of that accuracy, but also tools to help manage the ways that that forecast is measured against its actual accuracy, so that there can be improvement, scorecarding and understanding, especially with complex organizations where that forecast is coming from, again, some decentralized sources in part. And those that implement working capital programs typically see, again, per 14 billion Rand in revenues, see about a 10% improvement in that regard. The controls that finance can put on its business enable them to better manage the finances, and of course improve the business function and profitability potential for growth overall. There is a very low disruption risk in these kinds of projects. I think that it's often overestimated what can be done, and there have been, of course, lots of examples of less than impactful projects, I suppose, over time. But we believe that the way that we approach this and the way that we standardize things like bank connectivity within our product takes an awful lot of the burden off anyone implementing our solution. A lot of what we do, a lot of what anyone in this space would do, is built into our product, and you're configuring a solution as opposed to building one with a great toolkit with wonderful potential, but lots of disruption risk through that project, and lots of disruption over the potential over the lifespan of use, right? Because of product upgrades and so forth. Again, all of that with the way that we approach this market is completely removed from the equation. And that approach also means, as I sort of alluded to, faster time to value. When you have a less complex baseline, better practices that are enabled through digitization, it's easier to implement new program structures and enable the business in a much quicker way. I think that this also allows the organization to be forward-looking, which allows that strategic nature and capability of Treasury to stand out to the organization as a whole, and enables them to, as we've mentioned, partner with the business to really drive growth and profitability through difficult times, and as times begin to improve as well. So on Kyriba's website, there are many case studies, but I brought out one here that I thought was particularly powerful, because it speaks to not just the improvement of some of these statistics you would expect, reduction in working capital holdings, or better cash visibility, better investment returns because there's less idle cash that's instead being utilized in a different way. But I thought the statistic in the lower right for this organization was actually one of the most interesting amongst all the case studies that we published, because it has allowed this business over the last 7 or 8 years to increase the number of cross-functional projects that Treasury has committed to and contributed to within that business. And this is, one of the most effective and largest healthcare providers in the United States that's being exemplified here. And for more details, the case study is published on our website if you have interest. So in summary, we believe that Treasury at the center of this kind of transformation enables the CFO to deliver more strategic insight to the board, to do so in a quicker manner. It allows to drive all kinds of transformations around it, improving productivity and visibility and controls within the organization as a whole, and initiating the digital transformation and expanding liquidity performance management, we believe can deliver strategic value and reduce risks while increasing the adoption of digital across the financial aspect of a business. At the end of the day, the data that we are able to provide, the inflows and outflows from banks is really what drives what we're doing and allows to simplify processes that are quite manual, even outside of Treasury, right? So, the creating of GL entries to mirror what happens in cash. When you have an in-house bank creating those double-sided transactions, there's an awful lot of work that is typically done in a very manual manner, not just in Africa, but frankly, globally today. And there's a lot of opportunity to improve that. This is really where we've driven a lot of success and improvements for our clients over time.
Thanks for that, Nik. Great presentation. I wanted to talk about the digitization piece because there might be a few things that will come out of there, but we'll get to that in a bit. But just so in the meantime, what I can remind my audience, if they have any questions, please feel free to post them in the chat. I'll certainly try and pull them out and present them to Nik. Nik, just to kind of kick us off, and I wanted to talk about this, the transformations you spoke about, this transformational journey. Do you see this as typically being led by the need to address foreign exchange or risk, or the need to understand cash, or perhaps even liquidity? Or perhaps it's something of, you need to look at the need to register payment controls. Can you please just expand a bit on that so we can kick off our discussion?
Yeah, that's a really good question, Brian, because I didn't speak a lot about FX specifically, but I mean, frankly, I think the answer is all of the above. And by that, what I mean is each organization is a little bit different. There are organizations, I'm sure on the phone today, that have that see enormous complexities around foreign exchange and the risks that poses, as well as perhaps some more domestically oriented organizations who don't. At the end of the day, I think most my dealings with CFOs and treasurers around the world shows me that most organizations benefit from really doing the analysis of where are our biggest challenges, and what has the least impact, time, energy, resources, cost to address. And when you look at that sort of 2x2 grid, you start to understand very quickly, what can I do to impact my business most immediately? And usually, how can I build upon that? So a lot of organizations will start with, understanding getting greater visibility to their cash, understanding where that idle cash may be sitting, and forecasting cash flows in a much better way, and then build out from there. Some organizations will start specifically with, I need to understand where my foreign exposures are, be they balance sheet or cash flow exposures, net those, and build a hedging program that will really address those. And then maybe they'll move on to other aspects. Things like working capital might be a little bit more advanced if you're not going through your bank to provide it. So, those things can sometimes follow.
Yeah, and I like the piece about data visualization that you spoke about. But often what I'm seeing, Nik, is data is both an enabler, is also vital for the digitization, but it also remains pretty much businesses are hamstrung with the data because don't have the right quality of data. There are multiple sources of data. The integrations are so different from new products that come in. What should the CFOs be looking at when they want to do this kind of treasury-led transformation, given that they don't trust the data, they've got multiple sources of data, spreadsheets are still roaming around the office. What role does Kyriba play in that kind of space?
Well, I think twofold. One is, bank data typically is something we can trust, right? So if we understand what's going out to the banks from a payment instruction perspective, we're interceding that before it leaves the enterprise, before it goes to the bank, and we're getting intraday payment, intraday statements, or even just prior day, end of day statements. That's data that usually the organization can trust. To your point, forecasting is going to require combining that with a lot of data that would reside within the enterprise, APAR information, et cetera. So I think it's good to look for a provider that is on the cutting edge, right? A lot of times these transformative projects go hand in hand with an upgrade, which is in itself a digital transformation or a move to a new ERP system, maybe combining multiple instances into one. And a provider like Kyriba that's working with the ERP providers out there, building APIs that allow that sort of natural flow of information between the systems, and combining that with APIs that can provide real-time data from the banks puts you in a position where that data, you don't have to worry about the quality of that data. It's much more about how you combine it and utilize it and view it.
Right. And as we build onto that point, Nik, we know that traditionally, like treasury teams and treasury departments, whatever you want to call them, have been seen as like the back office kind of support team, right? But now we're saying, hey, we want to have treasury-led transformation. So what should they be doing in order to be on the forefront? When they utilize this data, who do they speak to in the business if you're working in a treasury space?
Yeah, I mean, I think the one example that I'd highlighted a little bit at the end there was the interplay between treasury and accounting that we typically see. So the entries of cash transactions, this typically requires sort of a left-right brain of the organization type action, right? There's treasury who understands the data coming from the banks. There's the accounting team probably for segregation of duties reasons that's creating the cash entries. And so, especially at crunch times, right, closing out the quarter, the month, whatever it may be, these are not typically actions or processes that are run on a daily, sometimes even weekly basis. So now I've got a pile of data that I've got to enter into the accounting system. And there's a lot of, calling from Bobby to Sally in accounting and treasury to, what is this? Oh, I don't know. I mean, that happened 8 weeks ago. Let me look through bank statements and figure it out. And I think technology enables us to number one, run those processes much more regularly. I have many clients that actually will do cash entries on a daily basis, even the reconciliation processes on a weekly basis, because the technology enables us to process much of that information in an automated fashion. What we typically see is clients will implement the what we call cash accounting, the GL entries, and they'll see a match rate in the high 70s to high 80s initially, based on just, we're implementing it, these are the rules that we think. But quickly, within months, we usually see that go to the mid 90s to the high 90s as a match rate. So as the cash transactions come in from the bank statement, The system identifies those. It says it should go to this GL string, and what is left is only a really small subset of items that go into a suspense account, and maybe someone needs to look at, because someone will look at those and say, you know what, these are the Chiquita bananas that we order for the cafeteria every 3 weeks. I see in the description line something that identifies that. Create a rule. No coding, right? This is all done by business people, the use of Kyriba. So there's no coding or scripting or anything like that. They write a rule, and those Chiquita banana transactions will be automatically accounted for going forward.
All right, I like that, Chiquita bananas. So, while we're on that, if a business wants to, perhaps you can tell us, from an investment point of view, right? If a business wants to get Kyriba software as a TMS for them, give us a sense of what investments they would look at. Where would be an ideal starting point to get these kind of data integrations and digitization?
Yeah, so I mean, a lot of what we do depends on the complexity that we're supporting, but there are many clients that will be investing maybe 15, 20,000 euros on an annual basis to automate cash management and forecasting on a global basis. We have clients that range from say 3 or 4 billion rand in annual revenues to companies like Amazon and Carrefour that are of course much larger. So I think that's a beauty of and really has driven the success of our organization with nearly 3,000 corporate clients on a global basis that run in that huge sort of spectrum of relative size. Speaking of turnover of the organization, is because we have built a tool that enables us to utilize all the efforts that we've developed over the past for prior clients, the banks that we've connected to in Africa, the payment formats that we built. Those are all built into the system. So the next client that comes along is utilizing what's there. It's a matter of turning it on, not building it, which is the unfortunate approach with many technologies today. And I think that's why we've been involved in a lot of these digital transformations, as far as even non-treasury-led ones, as far as connecting the ERP system to the bank, because we've done a lot of the work over the last 20 years. It's built into the product. It's a matter of turning it on, doing that penny test to validate your connection with the bank, but not building any of the noise in the middle that has to be developed, that someone has to do. We've built that for someone else. We leave it in the system. We maintain it as the bank makes changes, and each client is able to build on that.
All right. So, I mean, Carrefour, Amazon are, fairly big kind of businesses, right? To tell me, if you're looking from a small business perspective, what role, is there space for them to be integrated and play?
Yeah, absolutely. I think, again, it depends on complexity. I'll be quite honest, there's probably not a need for what we do if you're a domestic organization that has 1-2 banks. But as the complexity builds, the number of banks, the number of currencies, the global nature of your business, how far flung some of that data is, right? It's not like you can log on to a portal, I'm sure, and see, Nedbank, ABSA, Investec, right now. That's easy. But what if some of that liquidity sits in India? What if it sits in the US? Getting some of that information can be more difficult, even in this internet age. So you're then requiring, resources in other parts of the world. They have to provide it for you. You have to trust what they're doing it in a timely manner in order to get what you need. So a lot of what we do is driven by that complexity for an organization. But I think the price point, and particularly our modular approach to how we do things, there's no client that needs to invest in everything that Amazon uses for Kyriba. Maybe not none, but there are very few. Maybe there's no one on this call. But what we do see is that there are certainly needs for aspects of it, right? To have cash visibility, to have an in-house banking structure to support my much, much smaller organization, that may not have a $3 trillion market cap. That's that's very possible for them to consume this, again, because of the ease of deployment, the ease of use and maintenance. And it's an annual subscription. It's not something that you have to invest huge dollars into to get started. And then even larger dollars to hope that an integration partner, can get it up and running. And I think that's why they're, it's sort of evidenced by the types of partners we have that drive implementations for us. There are companies, local companies in Africa that implement, South Africa that implement Kyriba. And there are large, global Big Four or Big Five, whatever you want to call them, type systems integrators and accounting houses that drive implementations of Kyriba. And I think that's by itself evidence of the fact that our clients span quite a spectrum of relative size.
Yeah. So, Nik, you mentioned, I think one of your slides, you were talking about faster time to value. And I think this kind of, speaks to that. And that's what really businesses are looking for now, right? Is how far can I create and deliver value, right? So I wanted to perhaps just to expand on that point for us quickly. But before I get to that, I just want to remind the audience that if they have any questions, this is a good time to post them in the chat. All panelists and attendees, if you have one, we can ask Nik to respond to any questions. So feel free to post your questions in the chats and we'll read them out for you and ask Nik. So Nik, faster time to value. Tell us a bit more. I mean, because this sounds really exciting. If I'm a business, that's what really I'm looking for, right? I want to deliver the space of change and digitization and agility that we talk about is happening so quick, but I want to be able to deliver value.
Yeah, I mean, my focus over the last 2 years almost now has been on the Middle East and Africa. We have clients that we brought aboard last year amidst the pandemic that never met their implementation partner face-to-face, so never met me face-to-face. And we drove 6-8 week projects to get global visibility to their banking partners, their cash positions, and to merge that with APAR data from, in some cases, multiple ERP systems to allow for real-time cash flow forecasting. Maybe 6-8 weeks, same time span. Clients that have done that plus enabled the automation of the cash entries to the GL that I mentioned. That might take a little longer. So maybe that's 8 to 12 weeks, depending on the number of ERP instances we're connecting to, the complexities. But the other interesting thing, particularly when we speak about connecting to the ERP system, is that it's also a low impact to IT. Some of those projects that I just talked about had 20 or 40 hours of man hours from IT that were involved in connecting to 2 or 3 Microsoft, Oracle ERP systems in order to gather the information needed to feed the forecast, in order to accept information from Kyriba that would allow us to automate the upload or the posting of cash transactions based on data we're able to gather from the banking reports.
All right, and just because you mentioned the pandemic, right? And the pandemic has provided both significant challenges, as we know, but it's also provided a lot of opportunity and obviously a lot of new innovative metrics, right? So in light of the pandemic, has there been any changes in the offering just to kind of cater for the rapid change in the environment?
I mean, I think Kyriba is no different from the world at large, right? There were a lot of things that were underway that have been accelerated. Investments may be slightly shifted because of the pandemic. So I think, fraud is a good example. We've had for a few years now a fraud mitigation tool that you can design rules and identify potential fraudulent activity within the organization before the payments leave the enterprise. We accelerated. Maybe this was definitely started before a year ago, but I think we certainly accelerated our efforts to build machine learning and AI into that aspect of the product. So now we're able to not just work on the best practice rules that we've defined through hundreds, probably almost 1,100 clients today that are utilizing that solution, but now we're starting to harvest that data within your enterprise, your historic payment activity, to identify things that look like that, they should get a second look. So we pop up a flag and highlight that to someone in the organization, someone's that can look at it and say, this payment that Brian's sending is maybe a practice that we don't want to continue, or perhaps even something that might be nefarious.
Yeah, and just as we build on that, on the fraud issue, I want to talk about security for a sec, Nik. Given the work from home, and you're talking about approvals, the wet signature is kind of moving away, right? Tell us a bit more about the cybersecurity that's in place for your fully integrated platform.
Yeah. So, Kyriba has historically invested at least 22% of its annual revenues into its product. What does that mean? Number one, it means we're a growing company. We've grown by about on average 35% a year over the last 6 years. So that's a compounding number. But where does that go? It does go into the R&D that you think of. AI, machine learning for fraud is an example. Building out more capabilities around our working capital program, more and more capabilities around FX and the analytics tools used around that. But it's also that R&D is also going into the securitization of the platform, with nearly 3,000 clients on a global basis utilizing it. Governments, banks, defense contractors out of the United States, many different types of financial institutions. You can imagine that we've been tested, tried, and retested many times to sort of validate our capabilities and our chops in that regard. So we have 2 security operation centers around the world, one in Asia and one in the United States. Actually, I take that back. I'm sorry, 3, one in Europe, one each in Asia and the United States. And those are monitoring 24/7 the application, which, of course, is now a globally known organization where, some nefarious actors may look to take bad actions against us. So we've invested very heavily in the capabilities there, and it's usually a very important aspect of most organizations' evaluation of any kind of tool, and particularly Kyriba in this regard, particularly when they're doing payments. And we're very happy to provide the information needed for security, chief security officers and CISOs and their organizations to evaluate what we do and how we do it, so that they can feel comfort and assurance.
Yeah, that's good, Nik. I think there's definitely a few CIOs in here that probably want to allude to that point, especially with the security, given the environment we are, people working from home. How quick can I get the approval that I need? I previously just needed to run down the aisle to get the signature, but now I'm working from home in different parts of the world, and different parts of the country, because of this working from home idea. So I wanted to, again, just a quick reminder to audience, Nik, we've got the Treasury lot are often a shy bunch, huh? And this is why we have this webinar to remind them that we need to have a Treasury-led finance transformation. And to do that, we need to get out there and be more dominant and make those connections between accounting, the banks, and the business, and drive that. So you and I will continue with our conversation, and I wanted to perhaps just go back to, you spoke about the actual digitization piece. How urgent is it? I mean, if a business is already on the journey and, to get there, how urgent is it? How soon do we need to get in this? Because it almost feels like it's a catch up every time you want to get in. There's always something new. At what point did you say, okay, this is it. This is what I'm settling for? When do you know?
Well, I think we've got some very interesting tools that were built by a team we established in the U.S. initially, maybe 4 or 5 years ago, that have helped us to enable organizations to quickly, and I mean, we speak to people for 20 minutes and explain this. We ask them to maybe take 20 minutes to self-reflect and respond to a pretty easy survey. And we get the kinds of information that we need to create that 2x2 grid that I described earlier, right? What are my most urgent needs? Where are the most pressing threats and risks to the business? And what would it take to address those? So when you have that sort of idea of impact from a ability to address, and impact from a ability to enable the organization, you're able to quickly say, these are the things that I need to pick off first and drive at. I think that the other thing is we provide a single platform, single code base. Everything's designed to work together. So no client, not Amazon, who's been a client for maybe 8 years, nor someone who's been utilizing us for 18 or 24 months, typically does everything at once. They're usually looking to address certain items and add to that over time. Again, based on, where's the greatest impact to my business, how quickly and inexpensively can I address this need, and build out from there.
Nik, looks like our audience has woken up a bit. And we've got a question that's just come in the chat. It's from Winston. Winston, thanks for your question. And he's asking about South African partners, which is perhaps your South African footprint. How would you support implementation, and who do you speak to if you wanted to have a conversation here in South Africa?
Yeah, absolutely. Well, thanks for the question, Winston. Yeah, we have 3 established partners from an implementation standpoint. So these are certified firms with experience under their belt of having driven, in many cases, global implementations, certainly at least local implementations of the software. So they're able to advise and sort of drive the project management and the actions needed to configure our solution. Because unlike traditional software, it's software as a service. It is truly a matter of configuring the software to address the workflows, the needs, the processes that you want. And so I think on the line here is today is also Keith, and Keith Stewart is our local representative in the region. He can certainly help our clients, prospective clients, to identify those needs, utilize some of the tools that I described from what's called our value engineering team to address, where are the most pressing risks and threats? Where am I in sort of a process maturity, life cycle for treasury, for finance? Where am I, and where would I like to advance to in the coming years? And certainly align you with a partner that could help to enable that implementation.
Yeah, thanks for that. I hope that answers your question. I'm sure we can get further insights from Nik or contact with Winston and perhaps even Keith as we take that conversation further. If you have any other questions, Nik, when you started off, when we were talking about FX and risk and which area, and there are multiple kind of areas of business that are often boxed up. Is it a case of weighing out which one is the most important or which one drives more value, when you want to drive digital transformation? I know you said case by case, but is there a specific point that you've seen in industry?
Yeah, I mean, I think the complexities of one's business. If you have, 5% of your operations that happen to be, I don't know, in Europe, that's probably not a huge impact, and maybe understanding your cash position and managing cash flow is going to be something that at least drives more immediate value, has less impact in achieving. And the FX aspect, you're probably not, with that kind of exposure, let's say, going to build a well thought out, well designed, fully automated hedging program that identifies those exposures, allows you to track positions and take the actions you need to pre and post trade in order to account for that activity. Whereas someone who has 40% of their business coming in euros and 20% coming in dollars is maybe going to look at this in a much different way. I think particularly in a country like South Africa, the fluctuations of currency are when your base currency, maybe rand, is can be quite impactful. And so depending on the level of exposure you have, that will probably help you decide, how much you need to invest in certain aspects of your operation.
Yeah, I mean, I think currency exposure is definitely a big thing out here in South Africa because of those fluctuations that you mentioned. And Nik, as we get to the tail end of our discussion, perhaps you could give us a couple of pointers, give businesses here a couple of pointers, where do they need to start? Where do they go to? What do they need to look out for? Just some key ideas, a couple of things. I know we spoke about the 6 things. Perhaps you can just build on that and give them some guidelines as the next steps to lead transformation through Treasury.
Yeah, I mean, I think, the best place to start is usually self-reflection. So, understanding, stopping and thinking about your business and where you stand. And I think the structure that we call process maturity, treasury process maturity, we've designed sort of a 5-step, I'll call it theory, but it's really proven to be a good working model of how organizations, sort of start out with, really completely manual processes, lack of visibility to certain aspects of the business, to sort of a very well-oiled machine with treasury as the center point of that. We've gathered information from hundreds of organizations around the globe as sort of benchmarking data that we can utilize to evaluate that. So as I said before, I mean, it's not the exact same experience you'd have if you spent, let's say, $50,000-$70,000 with, EY or Deloitte or someone to come in and do this analysis. But, considering the complementary nature of it, I would say it's a 60 to 70% out of that same output, because it's actually been created by, former practitioners, people that have worked in treasury advisory roles at EY and other companies over the years to create this. And so, a lot of the projects that I've seen over the last 10 years have actually begun from a point where the organization was not saying, they didn't wake up one day and say, we're putting out an RFP to get a treasury system to do this. It was actually discussions with myself, with teams I've worked on, with people throughout throughout Kyriba, throughout the globe, that have helped them identify potential areas that they then potentially built a business case to execute upon. So, I think the first step is, think about where you are, where you'd like to be, and reach out to myself or Keith. We'd be more than happy to talk through with you what we've seen from others, help you gather that kind of benchmarking comparison against, companies in your industry, companies in your region, and help you decide where does it make sense to potentially invest in my business.
Thank you, Nik, and ladies and gentlemen, there you go. That is it. That's the 6 key areas that we need to focus on to drive that transformation of finance through treasury digitization. So I encourage you to have that moment of reflection, have an assessment of where you are, and the key drivers. I really pointed the fact that the time to value is a key component of this process. And I think we heard it here from Kyriba. And thank you very much, Nik. If there are not any more questions, I would just want to close off the session today and say thank you. We'll be in touch. I think Nik already shared some of his contact details. And if there's anything else that's pressing, please feel free to reach out to us or directly to Nik. So once again, thank you for showing us on this journey.
Thank you for having me,
treasury-led finance teams. Thank you, Nik, and we'll catch up with you once
you all.
I come to Dubai in the near future.
Looking forward to it.
Awesome. So up next, we will have a couple of webinars that are coming, ladies and gentlemen. There's a creative guide to compliance checklists. We've got data visualization masterclass, which will come from Sage, and also we have a tax compliance automation blueprint with Concise. So looking forward to seeing a lot of you. All those are coming up in the near future with us. And with that, thank you very much. Have a good morning and a good afternoon wherever you are. Thank you.